Good morning, good afternoon, good evening, Infinite Crypto Cruisers. Man, I am so excited today. Have you guys been sitting there wondering what in the world is going on with crypto? Are we finally ready to have an altcoin season? Are we finally on the verge of all of our dreams coming true, at least our crypto dreams, the ability to create some financial freedom in our life? Folks, have you been wanting to learn how to trade crypto? Maybe you've been somebody that's been buying and holding, which is an amazing strategy. I love hodlers. I'm a hodler at heart. But, learning how to trade crypto has been an amazing way for me to increase my bags. If that's you, you are in the right place. Today, we have Keith from Crypto Bullseye on the channel. Looking forward to him sharing his immense knowledge and skill set with us. And man, I don't even know if I want to call you a guest anymore, Keith. You're more like, a part of the family. I almost feel like I should change the name of the channel to the Infinite Crypto Bullseye channel, man, because I ain't gonna lie, this is my favorite day of the week, man. I look forward to this hour to 2 hours that we spend together more than any time that I have here on the channel. So welcome to the show again, Keith. Great to have you.
Thank you. What an introduction, Brad. I'm absolutely pumped for this one. The market's been pumping, and thank you so much again for you and your community for being so welcoming. It's really, really appreciated. And yeah, we're in a journey together, aren't we, Brad? At the end of the day, call it whatever you want. It's a journey that we're in together. We've all got shared interests. We've all got different types of methods of making our money, whether it's, like you mentioned, hodling, or whether it's trading, or a combination of both, which is something that I like to do. So there's a little bit for everyone, and everybody's different. Sometimes trading's not for people, sometimes it is for people. But like you say, it is a way to capitalize and make gains to put in that investment pot.
Yeah, absolutely. So if you want to add your charts to the screen so that I can share the screen, let's just get right into it today. I would love for you to maybe pull up the big kahuna, the number one, coin that everybody should own a little bit of, Bitcoin, and just kind of give us an idea of what you see on the charts and how that's going to translate into what you see happening over the next week or two or month or two with the altcoins.
Yeah, sure thing. So we start off with Bitcoin here. So we've got the big daddy. And one thing that you can see with Bitcoin is we've got a bit of a bounce in the market today. When you look at the rest of the crypto market, it's a little bit, when that loads up, it's a little bit mixed today. Got a lot of red days as far as the altcoins are concerned, and we'll explain exactly why. So we've got a bit of a bounce on Bitcoin. And if we just zoom out, you can see one thing here, that this looks like a 5-wave move. And I'm just going to change the chart. This is the same chart, but here we go. Just going to change this chart. So you can see that this looks like a 5-wave move. And what we're going to do is we're going to measure it from the bottom here. And we're going to check to see if this wave was bigger than this wave. And if that wave is bigger than this wave, the wave 3, which can never be the shortest wave as far as Elliott wave is concerned, you can see that that's a 1272, nearly a 1272 extension. But the main thing is this wave is bigger than the first wave. So you'd expect one thing, you'd expect a wave 5. And that looks like exactly what we're in at the moment. And we talk about time in the market, and I've got a couple of scenarios that I want to run by you very shortly, Brad. But as far as wave 5 is concerned, if we got a 1272 extension, it'd look a little bit something like this, which would be similar to the first move on the 123. So if we've got a 1272 extension on Bitcoin, you're going all the way up to 150,000. That looks like a psychological round number to me, 150,000. But it also shows one thing. This wave, we've just put in a new high, but this wave potentially could be the last wave. And that coincides with what we were talking about here, the time in the market, the Bitcoin cycle. So you could see here that we measured out, and I'm not going to go back through because we've gone through in the last 2 videos, but we've got an estimated time frame based on the previous cycles on how long we've got left. People are saying that we've got a 6-month alt season. So this is a scenario that I'm going to put to you, Brad. Usually Bitcoin tops out. Now, occasionally you'll get a pullback, you'll get a crash in Bitcoin. And as Bitcoin gets a pullback and people expect a higher low and a continuation to the upside, you'll get a blow off top with the altcoins. So I'm thinking Bitcoin ran a lot earlier than altcoins. What would happen if we did get a second half of the rally? And this is all speculation. We did get a second half of the rally. However, Bitcoin put in a lower high where altcoins collectively, i.e. total 3, put in a new high. And that was the blow off top. That was the end of the cycle as far as altcoins are concerned. So does it make sense that Bitcoin was so early to the rally that potentially altcoins could be so late to the rally? And we could have something like that lower high and that change in liquidity between Bitcoin, between altcoins before I'll blow off top at the end of the cycle. So that kind of coincides with this. We're saying we've got, let me just zoom out on the weekly. We say we've got, as far as the previous cycles are concerned, we've now got 12 weeks. So you can see that this is a wave 5. This is a wave 5. And this is completed now, this wave 5. We looked at all the way up to 150,000. So that would coincide roughly with this time frame. Then Bitcoin comes back down while altcoins continue to rally. Bitcoin puts in a lower high, end of the cycle. Cycle ends here. We don't know when the end of the cycle is going to be until after the cycle, because we don't know if it's going to put in a higher low. We don't know what the moves are going to be until often 2, 3, 4 months later. So if Bitcoin put in a lower high here and then total 3 went on and put in a higher high during this period, it's sucking the liquidity out of Bitcoin. It's putting the new retail money into the altcoins, the new shiny objects, allowing the altcoins to run. Now, if we did get a crash on Bitcoin at that point that I've just mentioned, what would that do to the altcoins? Because they wouldn't rally, they would pull back. So the altcoins would pull back, they wouldn't pull back as hard, and then you'd have another drive of liquidity into the altcoins for the second half. So it is speculation. It's just something that I've been thinking of, Brad, and it's something I'm going to monitor because, like I say, cycle isn't broken until it's broken. So until it goes past here, or a few weeks past here, and as far as I'm concerned, it's not broken. And that's how I have to strategize for it, because we've been in this market now since the previous market, Brad, and we've been doing one thing. We've been building in line with our strategy. Now is not the time to come away from something that you've been building on for the first 2, 3 years because you're letting emotions get involved in it, because things are changing in the market. So that's what I'm looking for. And what happens if I come out of the market? You know what my exit strategy is? In fact, I'm now, let's have a look, 6.82% away from starting my exit strategy, which is going to be over a 10 to a 12 week period, scaling out of the market incrementally, same as we scaled in during build phase. So that's happening now. That's happening now, and that could happen soon. So that's just one scenario that I just run by you. So as far as that's concerned, you're looking at that, you're 6.82% away. That's my confirmation for alt season. I've been saying it all along. People are saying it's alt season now. This is just a metric that I measure for alt season. Am I right? Could be. It's just something that I'm measuring for alt season. So I'm 6.82% away from scaling out scaling out the market. The question was, if I scale out after 10 weeks and then we have another 6 to 8 weeks to 12 weeks alt season rally after that, and I'm completely wrong, what happens? I've got a bag of cash and I'm sitting on a bag of cash, and that's the bag of cash that I've been waiting for. It doesn't matter how much gains that I haven't made, it matters how much gains that I've banked along the way. But that gives me options along the way. So if I've got 100% and I'm 100% out the market, and I wanted to play 10% in the market for the second half, if we did get a second half, because we don't know what happens, then I'm quite happy to play that 10%. If I'm wrong with that 10%, I've still got the 90% on the table. So that's a long-winded way of saying that's my exit plan, Brad. But one thing that I want to bring to your attention too, which is quite interesting, is what you'll see is the Bitcoin dominance. Now, the Bitcoin dominance, this is the weekly chart. So we've hit a 50 weekly moving average. That's a strong moving average. It also coincides, loose left, with this structure. So we've got a bounce at structure. We've got a bounce off the 50 weekly moving average, and we've got a reaction from Bitcoin. And you can see Bitcoin, let's go on the daily, it's going up today, where altcoins going down today. So you've got to expect a little bit of rotation in capital, where Bitcoin is going to try and put in new highs. And as Bitcoin puts in new highs, this dominance is potentially going to get another bounce. Where is it going to get a bounce to? Where is it likely to get a bounce to? 62.51%, 200 daily moving average. That looks like a potential bounce zone for me. And then another move and a continuation to the downside. When you get that continuation to the downside, well, that's when the big surge in altcoins happens. And that's when you'll see the break of total 3. That's when you'll see the break of total 3 and my exit strategy confirmed. So next, Ethereum. Ethereum's woken up. We said it was the sleeping giant. We said all along it was the sleeping giant, and never guess what? Nobody believed. What happens when nobody believes? Boom. Ethereum is the sleeping giant. So we've got a big move on Ethereum. Not only we've got a big move on Ethereum, it's 3,730. Its all-time high was all the way up here, 4,891. This is on the Binance chart. So Ethereum's not too far away from its all-time high. Let me just check, see how far away it is. Ethereum's around about 30% away from its all-time high, when before, just a couple of weeks ago, when nobody believed, Ethereum was 251% from its all-time high. So that's just putting it in perspective. So is Ethereum outperforming Bitcoin? This is the thing that everybody needs to know. Yes, yes, yes. And look at this. Taken the 200 daily moving average, not only taken it, we've smashed through this resistance barrier. We've not only smashed through that resistance barrier, we've smashed through this resistance barrier. So you've got a lower high, bam. You've got this higher, and then straight through this resistance, hot knife through butter. So expect a little bit of a pullback. You can see we're a little bit overbought. Expect a bit of a pullback, which coincides with what we were talking about on the Bitcoin chart. Bitcoin starts running, Ethereum can cool off. Ethereum can start cooling off, and then let the rotation happen. Let Bitcoin dominance come up. While that happens, then we can have another big leg to the upside. Then we can have another big pump. And each time this thing comes up and puts a lower high, it switches between narrative and it switches between the risk curve. And the further down you get, that's when you get the high risk ones moving. That's when you get the euphoria. So it's going to be interesting to monitor that, because one thing that I'm thinking, Brad, and I haven't got a clue how this is going to play out, is when I zoom out on the weekly, this is the Bitcoin dominance. So you've got your 200 period moving average on a weekly. The higher the time frame, the higher the conviction. That is going to be such a big bounce zone. And I'm not sure if we're going to breach that. I'd expect that we would breach it, but it's all about time in the market. And my first scenario, where I said Bitcoin puts in, I'll get the right chart up. Bitcoin puts in new highs, comes back down, puts in a lower high, and then altcoins rally. Could that be something like this as far as dominance is concerned? Bitcoin comes up, altcoins rally, Bitcoin recovers, puts in a lower high, and then altcoins just absolutely slam down here. So that could be the scenario that we played out, where you get a lower high for Bitcoin, you get a higher high for total 3, and you get the second half, which is an on-risk rally. Something similar happened in 2017, where Ethereum actually ran. Let's have a look. Ethereum, if I remember correctly, December 2017, where are we? So January 2018, we can look here. You've got January 2018, Ethereum's put in its all-time high, 1,440. And then we look at Bitcoin during exactly the same period. Get the right chart up, put this one up. We look at Bitcoin in exactly the same period, 2017. There's the 2017 high, December 2017. So you had the big drive in Bitcoin, you had the big run in liquidity in Bitcoin. There was the end of the bull market for Bitcoin. End of the bull market for Ethereum was 1 month later. So it does make sense that something like that could happen in the rotation of capital from the smart money to the dumb money. It goes from Bitcoin into high risk altcoins. And that's when everybody's grand's ringing them up and asking them which wallet that they need to use and what crypto they should buy. So that's what I'm looking for, mate. That's what I'm looking for, Brad, is I'm expecting Bitcoin to start outperforming over a short period of time. Then I'm starting to see a lower high on the dominance, another rally for altcoins. And it's all playing out nicely. We've been following these charts collectively for a long period of time. So it's nice to see that they're on our side now and things are looking nice. Within this Ethereum Bitcoin chart, you can see how far away, you just look at this trend line here, how far away Ethereum has got to go just to hit this trend line. You can see it is diminishing returns over the years, but that's fine because that is 94%. So if Bitcoin done 100%, that means Ethereum would do nearly 200%, because this is just the Bitcoin against Ethereum. So against its dollar pair, it'd be doubled. So it's a powerful thing looking at this. And that's when you get your alt season 2025. We're nearly there, nearly got the break, nearly got the close of total 3. You can go and watch any influencer you want, and they've all got their measurements of alt season. I'm not saying any of them are wrong, but this is just my measurement, and that's what I'm going by, and that's what I'm sticking by. We're 6.82% away.
Awesome. Thank you for that. So real quick, I wanted to pop over here and ask you a question. So for those that are watching the channel right now, there's still in my opinion, and it sounds like in yours, an extreme amount of upside to be had if they get themselves positioned properly. So how are you taking advantage of these opportunities that are presenting themselves? So if one of my community members is sitting here and maybe they feel like they're a little bit behind, like they wish they had more money in the market, they wish that they were, a little bit better prepared for what is coming, what would you tell them? Like, I think that there's still a little bit of time left for them to make something happen, but what would you recommend to that person that maybe has that fear of missing out, doesn't believe they've got enough money in the right places yet to really change the wealth needle in their life? How would you recommend that they go about, maximizing potentially what is going to happen here over the next handful of weeks?
Yeah. I mean, one thing that I've done, Brad, 2 days ago, I closed 10 different positions. So I closed 10 different positions because I wanted to focus on something that you mentioned previously, which was building a larger position. And I wanted to simplify things as well. And I could see that we were getting at a resistance point. So I closed the 10 positions and I'm now in 2 positions, one on each exchange. Those positions are AVAX and Cardano. The reason why, because those haven't run yet. And I talked about one thing on my channel recently, which was what I call the rotation of death, where anybody that's new to crypto that you just mentioned, that's trying to make some money and that's trying to make some money, the one thing that they shouldn't do is to go onto the crypto bubbles and get the big green one, the biggest green one, and pick that one. That's the one that's already run. And this is what I call the rotation of death, when you go from something that hasn't run into something that has run. So that's a little thing as far as your existing community is concerned that are already into crypto that they should be mindful of, because I'm guilty of it. I'm sure you're guilty of it as well, Brad, where you come out of one thing and then you go into the next thing, and the thing that you've just come out of runs and the thing that you've just gone into actually pulls back. But it depends whether you've got that trading mindset, whether it depends whether you've got an investing mindset. You are right, Brad, we are still early. We haven't had a break. We haven't had a close of total 3. So that means that as far as the alt season is concerned, it hasn't started yet. So there's opportunities there to be had. However, we've had some big rallies, so it is difficult. And that's one of the reasons why I picked Cardano and AVAX, because those layer ones, when you look at them in comparison to Solana, obviously Bitcoin does its thing. We've had Ethereum that's run, and you've got the layer ones that haven't run, and those are 2 layer ones that haven't run yet. And I actually looked, Brad, at the allocation. I'm not going to say what allocation I put in there, but the take profits on there to the conservative 132, $1.32 on Cardano, it was like 5,000. And then to the $2, it was something like 11,000. And I thought, well, I've built my position. It's only on three times leverage. So I've built my positions and I've scaled and scaled and scaled as far as limit orders are concerned. And I've got enough wiggle room to come down about 80% on both of those cryptocurrencies. And I think that you and I both know that those 2 layer ones are probably not going to go down at this point by that amount. And if they do, then something bigger pictures at play, and it's probably game over. So there's a high probability that those are going to move. I've got protections in place all the way down. It's on low liquidity, and I'm hoping to take advantage of those because the missus wants a new kitchen.
Awesome. I love it. On that note, I want to jump over and I want to have you take a look at a coin. I'm gonna pop your chart back up here in a second, but I want to show folks this token. And part of the reason that I want to show them this token is because I did an interview with this incredible project just a few short months ago called Deana. The first full stack Oracle suite transforming real world assets. And then I just had a good friend of mine. I'm on the phone with him yesterday, and he told me that the Economic Ninja just put out a video a few days ago on this project, and that it had had a massive pump, and that he got in on this pump. He had a 10x leverage trade in on this. So I go look at it, and holy smokes, man, this thing is up, over 200% in the last 30 days. Just actually 198% even in just the last 4 days. And so this is great for all of my holders that watched that interview and that went out and bought a bag. This is obviously doing pretty, doing incredibly over. If we look at the 3-month chart, we can see here, maybe if I can get this to load right. the 3-month chart here, we can see that, 3 months ago, we would have been looking at this token in the ballpark of around 40, 40 cents or something along those lines. If we go out, maybe let's say take a 1 year look, what date was this? So this was April, May, June, July, August. So yeah, somewhere in this vicinity of 30 to 40 cents. But my question to you, Mr. Bullseye, are we too late? I've got this pulled up here on my BYDFI account. With this incredible pump, I kind of wanted you to take a look at the chart on this token, and you tell me what you see. Is there any merit in potentially still putting in a trade on this on Dia, or when you're looking at the chart, does it look like it's all over for this token?
It's not necessarily all over, but it's something that I wouldn't get involved in, because I mean, I'm looking at this on the daily now, and I can see that you've got no support to fall back on, Brad. So if you go put any kind of protection zones in place, which you would need to, otherwise you could potentially drop just back to the next support, 47%.
Wow.
It's yeah, and that's, I mean, if you were going below the previous low and you were protecting yourself below the previous low, which you just wouldn't do at 74% of the downs, that thing has absolutely ran. It's probably got more upside, Brad. It probably has got more upside, but when I look at it from a risk to reward perspective, you've potentially got a pullback there, and it's breached the $1. It could come back to $1. It's got a little bit of support at 83 cents. It's got a little bit of support at $1.03. Gone.
Okay. I know, looking at CoinGecko, its all-time high, during the last bull market was about $5.73. We have no idea if it will ever, reclaim those types of numbers. It is at, $128 million market cap. So it's not like a small cap gem. So it sounds like if somebody really loves the project and believes in it long-term, and they want to buy a little bit spot, maybe that's not the worst idea in the world, but it sounds like trying to leverage trade it.
No.
There's just better opportunities and a lot less risky opportunities.
Exactly that, Brad. And if one thing that I like to do, I've just got on the daily chart here, one thing that I like to do, if I'm trying to be conservative and I'm not going to be greedy thinking that something's going to go to all-time high, I look until where it's put in a bear market low structure initially, and then I come back from the lower high, and then I'll say, right, okay, I'm going to stick, wrong one, a fib retracement from here to its bear market low. Then I'm going to look for projections. You can see straight away how these are sticking points and the rejection points, 38.2% retracement. But what we're doing is we're being more conservative, because you mentioned that high all the way up here, $5.80 on this chart. We've taken it from, get rid of those because they're extension levels. Get rid of those to confuse things. We've got a conservative to the 618, $1.65, and then to the 786, $2.05. And there's a chance that it'll come back up and test this high 255 and even potentially put in higher ones than that. But if you're looking, like you mentioned, for a spot, then you've got 48% and respective 85% upside just to the next resistance point. So thing is, let's have a look. Let's see if it's overbought or oversold. How would you plan this? If you were trying to get in this realistically, you'd want some kind of a retracement. You've got 38.2% retracement. That means that it's going to be a strong swing. If you've got 38.2% retracement, that's coming back here to 88 cents. So you can monitor this. And if you were looking for buy zones 1 and buy zones 2, you'd have buy zone 1 here, buy zone 2 here. And then even if you wanted a big 786 retracement, buy zone there. So what would that do, worst case scenario? If this thing pulled all the way back to the 786, you're averaging your position around about here, which is 67 cents, where price is currently sat at $1.08. So whilst that's happening, you've got things that are telling you signals whether something's cooling off. You've got the stochastic pulling down into oversold. So as that's pulling down into oversold, you can see what level, 382, 618, 786 is being hit. See, this is extremely overbought, showing it needs to cool off. It needs to cool off, showing if you want this, you can get more of it if you just have a little bit of patience. Wait for the RSI, make sure it holds the 50, make sure that the stochastic comes down. And how lucky are you? Are you going to be 382 lucky, 618 lucky, 786 lucky? That's how you can get more bang for your buck.
Beautiful. So the next thing that I would like you to take a quick look at is there's this real good looking handsome, intelligent guy that did this incredible video not too long ago on ICP. And I wanted you to talk a little bit more about ICP and your thoughts, you know, maybe break what you shared in this video. And folks, those of you that are watching, this is a Crypto Bullseye's channel. He just did a video on ICP. It's titled here, ICP's Wild Ride from 500 to Now, Explained and Bull Market Targets. And I just saw this pop up on my feed and I haven't watched it yet. So I'm going to ask you guys that are watching this video to go check out this video, but I also wanted to just hear what you had to say, because one of the things that caught my eye about this token, as you had mentioned, is this thing was, I mean, at least on CoinGecko, it's showing that this thing was all the way up at $700 back in May of 2021.
Yeah.
You know, its all-time low here a couple of years ago was $2.87. It's sitting here at $6. So real quick, if you don't mind pulling up your chart on ICP, I would love to know what you see in a real, you know, in a real good bull market altcoin season. Is ICP a token that you like and would buy and hold? Is it a token that you're trading? What are your thoughts on ICP, and how close do you think it can come to its previous all-time high? Is this a token that might have a 50 or 100x in it, or do you think it's never going to ever reclaim that former glory and maybe it's only got a 5 or a 10x in it? Like, what are your thoughts on ICP?
Yeah, absolutely. Huge community, huge community behind them. So yeah, ICP are big. I do hold ICP. I do like ICP. I think ICP is going to do well. One thing, as far as reclaiming its high is concerned, could it? Anything's possible. Do I think it will? Definitely not. So basically, let me show you this, Brad. What you mentioned was $700. Or 800, I think you mentioned, actually. This is something that I was showing on my community before. And this is, for anyone that doesn't understand, you've got different prices on different exchanges. And when there's a difference between different prices on different exchanges, that creates one thing which is called an arbitrage, where people will buy from one exchange, sell to the other exchange, and ultimately the exchanges will level themselves out. By the way, can you remember this one from the last cycle, Brad? Can you remember ICP from the last cycle?
You know, during the last cycle, it wasn't on my radar. I never had bought any of it. I never made any gains or losses on it. It kind of came across my desk probably a little over a year ago, because I got in on a token called ICPS, which is ICP swap.
Yeah.
And I got in on like a private sale of ICP swap. And in order to get in on that private sale, I had to go create the ICP wallet, the internet service wallet. Yeah. And that was kind of when ICP got on my radar a little over a year ago.
Yeah. I mean, I did dive into, basically in the previous cycle, it got absolutely hammered and everything was going up, Brad, and ICP was going down. You can actually probably look. Everything was going up, and like all the big promoters, BitBoy, everybody, they said it was going to the moon. And look at this, just down and down and down. It was launched here. When was this? This is on the Binance chart. Like, we did have the May crash, but we also had the second half of the alt rally, and this thing just continued to go down when everything was going up in the bull market. So this is the Coinbase one. It's $500, $498 on the Coinbase one.
Okay.
And I had so many people telling me that my chart was wrong, and I'd had a misprint on my chart when I showed them this. ICP on the Binance chart, $2,826 it topped out. So imagine the arbitrage on that, Brad. If we'd have been there during that time, we'd have been very wealthy people.
For sure.
But that shows the differences between what you can have between certain exchanges. And I always say to people, when you're going on an exchange and you're looking for tokens, especially when you're trading, make sure that it's got high liquidity within there. Otherwise, the wicks, you'll get wicks to the upside, wicks to the downside, more manipulation because there's less liquidity in there and there's less money that's needed to move the market. So always find an exchange that's got plenty of liquidity for that token that you've got, because you can have a big exchange, for instance, Binance, and Binance might only have a small liquidity pool for a low cap, where you might have a different exchange which has got a high liquidity pool for that low cap, and vice versa. So make sure that there's enough liquidity for the exchange. But as far as, we're going to jump out off the Binance one, because I like to use the Coinbase one. One thing that I did do is exactly the same as what I mentioned before, and I'll just pull this, get rid of the extensions on here as well. We'll bring them back very shortly because we can look for extensions. But we come all the way down here. We made a base. This was the base, and that was the rejection point. So what I've done is I've done exactly the same thing. And I put my Fibonacci, what we just talked about on the previous one, from this lower high all the way down here, $87. And I've said, right, $87, that's the lower high. Price went all the way down at just over $2. Price went all the way down to just over $2. And this has got a huge community. And as far as the technology is concerned, it's got really, really good built-in technology, something called canister technology, which builds on smart contracts. And I don't fully understand how it works, but it's a clever thing. It's got lots of awards for it, but I'm not trying to shill it too much because I'm not actually affiliated with it. It's just something that my community like, and it's something that I'm in. So we're at a rejection point now. We're going to look at the projections where we could potentially go just to the previous retracements, which is 38.2 up here. The chart's all over the place because of how big that volatile spike was back there. So it's a little bit wavy, $34.69, which is just the conservative 38.2% retracement from that really conservative lower high. And this is what I say about people saying, oh, I need to get the thing that's got to go all-time high. I've got to get this thing. It's going to go 5x. It's going to do 6x. It's going to go 7x. And you're like, little ICP, which is down here, just to its 38.2, is 4.5x. So why do you need to go to all-time high and do a 3x when you can do just a mere 38.2% retracement for a 450, 500% move, 4.55x? So there's opportunities when you've got patterns like this. And one thing that I've been showing on my community is this resistance point here, which is the 200 daily moving average. It's going to break through there soon, Brad. When it breaks through there, then you'll start seeing bigger swings. You'll definitely start seeing bigger swings. So once we break through there, you can see you've got this resistance barrier here at $7.34, but then we're going to start taking out previous resistance barriers and make our way up to this pattern here, which is going to be the big pattern. And once we break out of there, lots of ways that you can measure this, but you can do that from the lower high to the bottom of this move. And then you can measure the initial breakout. Look at that. Where does that go? 34.95%, Brad. Like literally the 38.2% retracement. How does it happen? 38.2% retracement. So there's the first one, $35. Second one, 61, 55. Third one, 786, 68. Does it need to go to all-time high? Definitely not. Am I preparing for it to go to all-time high? 100% not.
So, I mean, do you think so? You think 2024 to 30 is possible? Wouldn't be too unrealistic?
Yeah, I mean, look, this pattern's been a long pattern, and the bigger the base, the higher the space. They're saying this pattern's been an accumulation range for 1,206 days. 1,206 days in this range. So when you get a breakout, all this resistance here is previous resistance. This is the major resistance, the recent resistance. So all this is going to get eaten up once we get this break. So if we get a volatile spike to the 38.2, you're probably going to get some kind of a pullback. But I would say that you get an acceleration to the 618 all the way to 55. This is like a 10x, Brad. Do I know it's going to happen? No, I don't know it's going to happen. But as far as the chart's telling me, as far as the patterns are concerned, is it possible? It's very possible.
Okay. Awesome. You know, I think something else that a lot of people don't take into account when they're looking at something like this is depending on when a token launches, a lot of times you'll see, you know, an amazing all-time high. So I don't know for sure the tokenomics on ICP, but it wouldn't surprise me if it launched fairly close to its all-time high. And probably what could have happened, and what happens a lot, is that it launched to a very low initial market cap, and usually the supply is restricted. So normally you've got, you know, a bunch of private sale investors that are only getting a few % of their tokens at launch. And so a lot of times when we see these all-time highs, we don't understand that, you know, like say that there was 1 million tokens, you know, just for arbitrary numbers, say there's 1 million ICP, that there might have only been 10,000 initially in circulation. And so that $600 price is a whole lot different then when now the whole 100 or the whole million of them is out in circulation, the odds of it going back up to $600 a token now that the whole supply is out in circulation, changes a lot of things too. So I think that that's a important caveat for those of you that are watching the show. When you're looking at a token that had an all-time high 4 or 5 years ago, it's important to do your research, go back to the beginning, to when that token launched, and try to figure out, if you can, what their circulating supply was back then versus how many of their tokens are in circulation today.
I think you were, I'm pretty sure you hit the nail on the head with that one without actually knowing, Brad, because I don't know the ins and outs of it, but I think it was pretty much low supply initially. And I don't know whether it was the team, but it was certainly people dumping and dumping and dumping on the project when it should have been the other way around. So I think there was a few bad players in the market, but it's all about supply and demand. You're completely right, Brad. There was not much supply, but plenty of demand, unfortunately, when there was any of those few tokens in play.
Right. Awesome. And real quick, I just wanted to, thank BYDFI for sponsoring the channel. They sent me $500 to trade with today. It's the way that they send me these funds is I can't take the 500 and just go, transfer it out of the account and use it, for my life. But if I lose the 500 trading, it doesn't cost me anything. And if I make money with the 500 on my trades, then I can keep the profit. So I always like to be like full transparency on that, because I had another exchange. I'm not going to name their name, but he came to me. He wanted to give me like $100,000 to trade with, but it was going to be fake dollars. And he's like, hey, if you get on your show and you're making these big, massive, $25, $50, $100,000 trades, that's going to look awesome to your community. And we're going to get more people using our exchange. And I said, yeah, but that's not my style. I'm not going to lie. I'm not going to act like I'm making $100,000 trades when it's fake money, So he wanted to just basically set me up with a paper account that I could trade. But this BYDFI 500 is legit. And the reason I mention it is, you are supporting the channel when you register and trade on BYDFI. So if you go to that link that I've got popped up here, right here in the chat, that should hyperlink you. If you go sign up for BYDFI, if you're in the United States or in the UK, there's no KYC necessary. There's no VPN. They pretty much take on all comers unless you're in some of those restricted countries like Iran or Cuba, places that none of the world really wants to do business with. So the reason I mentioned it today is because we're getting ready to do a little bit of a trader contest for the Infinite Crypto community. So you want to go get your account set up and be ready for that. They're going to give me some additional prize money. And for those of you that are trading on the BYDFI exchange and you've come in through my referral link, there's going to be somewhere between an extra $500 and $1,000 in bonuses that you can win through this trading contest that we are getting ready to announce. So I just wanted to take a quick second to mention them. I believe in full transparency, so good, bad, or indifferent. I'm kind of curious your opinion. Have you ever used BYDFI at all? And do you have any opinion on the exchange?
I haven't got any opinion, and I've never used it.
Okay.
No, I'll have a look into it actually, Brad. That trading contest sounds fun.
Awesome. They've been in business for about 5 years now. Knock on wood, they've never been hacked. They've never lost any of their, company's funds. They've been sponsoring the channel on and off, and I've been working with them probably for, 6, 7, 8 months.
Yeah.
They've always, I've always been able to get my money on and off the exchange. And so I can say good things about them. They've definitely taken care of me, and it's been a blessing in my life to have this, because as a United States citizen, I got kicked out of KuCoin, I got kicked out of MEXC, I got kicked out of Bybit. So I didn't trade leverage for a long time because, I didn't want to get funds tied up in an exchange that didn't want United States citizens and have to worry about something happening and them trying to hold on to my funds and so on and so forth. So probably about the time I started this Trader Tuesday live stream, which has been a while ago now, like I think it was back in maybe August or September of last year that I started this Tuesday Trader live stream. BYDFI has been a big part of that ever since I got rolling. So I definitely like them. And I was just, wondering if you had heard about them at all or had any, opinion one way or the other. But yeah, man, go join through that link and we'll get a trading contest set up. And, I would love to get your opinion on them. And at some point in time, would love to introduce them to you. But I know your restrictions where you're at, you got to be pretty careful with what you talk about when it comes to exchanges on your channel. But I do have a pretty good relationship with them. And if you'd ever like an introduction to them, I would be happy to recommend you to BYDFI.
Sure thing. It's a pain in the neck in the UK. To be honest with you, you guys were so much further behind, Brad, than what we were. And we were innovating in a way that wasn't good innovation. We were going down and I don't even know if we're still going down the route of the central bank digital currency now, but you guys have gone through the 3 bills that have gone through, obviously, Congress that need to go through the Senate, and if I'm getting your politics correctly, but they've all passed with flying colours, and that creates the regulatory framework that we've been striving for in the UK. And we're so far behind you now. We're like so far behind you. Like within the last 100 days, the US has pushed so forward with the regulatory framework, and something that you guys can be proud of as well, because I'm sure it's going to make your life a lot easier with exchanges like this, Brad, and exchanges where you did have concerns previously.
Yep. Yeah, absolutely. So I pulled back up the ICP chart, and partially because I want your opinion on it, but I also want to ask you a question. One of the things that I notice is when we're going into a bull market like this, I feel like there's a little bit of a switch that needs to get turned on in my head. And so it probably is fair to say that there's some of my viewers that might be going through the same thing. Like I'm looking at ICP here on CoinGecko, and I'm seeing this 30 days, it's up 35%. And I guess we were in a bear market for so long that's kind of scares me. Yeah. Like if you were to ask me a couple months ago, hey, should I go maybe throw a leverage trade in on ICP? I'd say absolutely not, man. It's up 35% over the last 30 days. And I would be terrified that, if it has a retracement, that it would be very easy to get liquidated, even if you were to, put in a couple ladders. But I think that now that we're in this, bull, it looks like we're headed into a bull. You have to kind of, in order to take advantage of the bull market, correct me if I'm wrong, you have to kind of continue to ladder into these trades even as they go up. You can't afford to just sit back and wait for a big retracement and a better entry point, because we might never get it. Does that make sense?
Yeah, completely. And you are right. And you are flipping your mindset from investing to trading there, Brad, because investing, you're trying to average your position down. Whereas with trading, whilst you're in a run and you've got to flow with the run, unfortunately, you've got to average your position up. And one thing that I like to do is I like to take 50% off at structure resistance and then wait for it to come back down, put in a higher low, wait for a breakout, and then I'll go from that 50% that I've taken out into a higher position, like higher leverage position, ride the breakout on a higher leverage position, and then ensuring my stop losses broke even at that point, even after an increased leverage, took profits off the table, put in a higher low structure, waited for a break. You are at least break even then. That's free. I'm happy to take risk when something's free. I won't take risk initially. I won't stick 10, 20 or anything like that initially from anything. I'll build my position, wait for me to understand that the thing that I've invested in is actually going to put in a new high. I am right. It's going to put in a higher low. When that happens, that gives me confirmation that I can add risk to that, reduce my stop loss to break even, and ride it. Now, what's the downside to that? Downside to that is you'll take 10 trades. and 6 of them will come back and break you and stop you out broke even. And you might have even got 10, 20, 30% not hit your resistance point. Then that realized, unrealized profit will come all the way back down to break even. And that does hurt, but you only need 1 out of 10 or 2 out of 10. Literally, you only need 2 out of 10. And then those 2 will make up for all of the stop loss fees, because you're going to get a little bit of fees. You're going to, if you put your stop loss at break even and you stick in a couple of $100 on, you're going to get 20 cents here and 30 cents there, and they'll build up over a period of time. But you only need that 1. Once you're breaking even, you put your stop loss at break even. Once you put in a new structure, understanding that the trade is going your way, you have to continue with the trend. By continuing with the trend, unfortunately, that means that you have to scale your position up in that instance, Brad, doesn't it?
Okay, makes sense. So if I'm understanding you correctly, ICP here at $6.06 would be a token that if people are watching this and they want to do some leverage trading and they have an interest in ICP, you wouldn't tell them, no, you definitely don't want to trade ICP. ICP is something that it wouldn't hurt to maybe get a little bit of a position in on.
I would tell them, not financial advice, I would tell them ICP is now at a resistance point. Can we just pop my chart back on and I'll show you very short term. I'll show you very short term what I'd be looking for on ICP. So we're at a resistance point here. Can't buy resistance. Do I think it's going to break through there? I do. However, that's resistance, that's resistance, that's resistance 5 times. Why is it going to be different this time? You've got your 200 daily moving average. That's your big daddy. That's what we need to break above. See this level here where the 200 is, $6.22. If you had a break tomorrow that went through there, come back down and hit this 200 at exactly the same level, that is an 80% higher probability move than buying it here. Once you've retested, you've got an 80% or 80% give or take higher probability that that's acted as support and you're going to get a continuation. Whereas you're buying it here, you know, that's resistance, that's resistance, that's resistance, that's resistance. So what I would say is nearly there. There's 2 ways that this could play out. It's either going to break through here or it's going to pull back. It's a higher probability that we're going to get some kind of a pullback, everything overbought. So it's indicating that potentially if you were going to get an entry, you can get it cheaper.
Okay.
First area, you've got this structure here. You can see when you look and zoom into this, you can see the wicks. These wicks tell a story. These wicks tell a story because that's the candle close. That's the fight of the bulls and the bears at the end of the session. And that's created where that close is. You can see that's where the resistance was and that's where the support was. That's where 38.2% retracement is. Magic numbers, magic numbers. So you can see 38.2, that's coming all the way back here at $5.52. That is from where price action is now to the downside, 8.24%. So I would be waiting for 2 things. We're either pulling back and getting it cheaper, or we're breaking through and retesting it and getting it the same price with an 80% higher probability. Those are the 2 scenarios. If it pulled back to the 618, which it still can, just monitor this. How long is it going to take to come down or cross over? Sometimes it doesn't come all the way down. See here. Sometimes it doesn't come all the way down, but you're waiting for it to cross over and give some kind of indication that we've pulled it back and held some form of support, whether it be that or whether it be this one. 61.8 is $5.06. If you can get it for $5.06, that looks absolutely banging. How can you play that? If you had hypothetically a $50 allocation, you're waiting for a pullback. Firstly, you need to watch the chart. If it breaks out and if it retests, then you want to wait for the break, then put a limit order on the retest, which is the 200 daily moving average, which is currently $6.21. So if you've got a break, you're waiting for it to come back, you can stick a limit order at that price. Otherwise, we're at resistance, we're waiting for the stochastic to pull back, you're waiting for a reaction at the 382, if not the 382, the 618. Looks more realistic, 618, because you've got this the big build up of price action here. So the 618. So wait for that to happen, and then I'd take a position. That's how I'd play it. Okay. So there's 2 scenarios, and there's 2 ways of playing it, and both ways are good because you've got a real confirmation if you break the 200 and come and test that as support, and then you've got a lower entry by quite a lot. What did we say? Okay. 16% to the downside if it does pull back. So prepare for both sides. Prepare. Yeah.
So ICP, if I understand you correctly, is one that you would have kind of an alert on that you'd be watching closely. If it goes from this $6.06 level, breaks through $6.21 level, then you would be putting basically in a trade at about 621. And then to make sure I'm understanding you, if it retraces, would you put in a trade at that $5.52 level, or would you wait to see if it was going to go all the way back to like the 505 level before you put in a trade?
Yeah, sorry, I didn't finish. I meant to say that, but I didn't finish. Yeah. So you can, if you had a $50 allocation, you could stick $25 there as an example, $25 there. I wouldn't expect this 786 to get hit, to be honest with you, but this 618 could quite likely get hit. So if you split your position, what happens if it comes back down and then it just goes mental after the 382? You've got $25. What you're going to do with that? You're going to wait, and you're going to wait until you get a higher low and do what Brad said. Once you've got a higher low, what you'll see is something like this. You put in a new high and then you get something like this. You're waiting for one thing. You're waiting for a breakout. So you're waiting for a breakout. And once you've got a breakout, that's where you can add your position. So if you've got $25 here, you don't manage to get $25 there. You're waiting for this breakout and you can add your $25 in there and get the breakout. And at that point, that's what I was talking about earlier. Sometimes if I can put my stop loss to break even, then I can increase my leverage at that point and then allow it to be a risk off trade.
Okay, makes sense. So one other token that I would like your opinion on is, this is one of my favorite tokens in a lot of ways because I'm able to earn almost 15% APR on it just by holding it on Coinbase. So I've been accumulating a spot bag of Cosmos Hub of Atom. But, watching, looking at it here on this 1 year chart, it's popped down here as low as, around $4 or $3.76. But I've looked at this one, and it's another one. I don't know the exact supply on it, but this is another one that was a $45 token back in 2022 that I feel like has a lot of longevity, is going to be around for a while, and has the potential to, have a significant upside in a altcoin season. But I wanted to kind of get do you have any thoughts on Cosmos Hub? Do you like it as a long-term hold? Do you like it as a trading token? What are your thoughts on Cosmos Hub?
It tends to, do you know what, mate? It tends to run with Polkadot, this one, funnily enough. Let me just check this against Polkadot, because they run very similar as DOT. I do hold some of this, Brad. Yeah, these things run. See, look at these two charts here, mate. Wow. So you've got Atom, DOT. These things weirdly run together. You can see that DOT's probably a little bit front run Atom as far as, let's have a look actually. So you've got DOT, that's front run Atom because there's the lower high structure and Atom's at this structure still. One thing that I like about this is what we were talking about before with ICP. It was underneath here, where we were saying we had to wait for one thing, either a break to the upside or a pullback. We're halfway there on this because we've got a resistance and we're coming back here. So on this, if I had a limit order set at $4.77, that'd look good to me. So that's a little bit ahead. But it's really weird that, because I always remember Polkadot and Atom running together, and the charts do look really similar. I've done this one on DOT. So you've got that bullish divergence, bullish divergence, bullish divergence. Let's see if we've got an Atom. It's a little bit different. Yeah, it's sloping upwards. You can see higher lows, higher lows. It's a little bit different here because we put in a lower low there. The charts look very similar. Yeah, I like that one. It's taken out, at the end of the day, it's taken out the 200 moving average. So even if you had FOMO, massive FOMO, and you had to take a position now, what are we, $5.04? $5 is probably going to act as strong support. Psychological, it's broke through there. It's broke through the 200. Doesn't look too bad now. And then you've got another position at the 200, $4.75. What you'll start seeing here now with these moving averages is this is going to start crossing upwards As long as this remains as support, that's going to start crossing upwards. Then you're going to get this faster paced 50 period moving average, moving up, getting a lot of traction because it's 4 times faster than the 200. And then you get your golden cross. Retail love a golden cross. Once you've got a golden cross, you tend to see things like this happen. There's the golden cross. There's a golden cross. So you get big swings once you've got a golden cross. Not the greatest example. The better examples are here in the previous bull market. You get a golden cross down here, and you've got the move here where you've got the green at the bottom, the yellow in the middle, the red at the top. So the retail love a golden cross, and that's probably what's going to happen very shortly on this one. Yeah, I don't mind that one, Brad. If I was going to pick one out of the ones that we've looked at today, I'd probably pick this one as far as best risk to reward's concerned.
Okay. Now, is this one where you would also be waiting for it to have a breakout and get above the 200-day moving average like you were on ICP? Or do you think this one is in a situation where if somebody wanted to go, you know, start a trade and create an entry point right now at the $5.07 level, that would be a reasonable thing to do?
That would be, I think it'd be a reasonable thing to do. So this is what you need to think of, right? We've got, where's the downside? We've got the downside. We've got this strong support here. We would hope that it wouldn't come all the way down here. So you've got 33% to the downside. So you've got 33% to the downside. That tells you if you were going to put whatever liquidity into there, that would be how much your liquidation point would be. So if you had a 3x, your liquidation point would be all the way down here, 33%. So that would tell you that if you had another one, just a safe one, just in case, a limit order here, and then you've got a second entry here, which is a hope. You hope you don't get this taken entry, but it did come back down. That'd rescue you. That's your rescue, because that would bring your average a lot further down here.
Okay.
So that's the thing you need to think of. If you were going to go stupid leverage, where's your downside? If you're going to go stupid leverage, where are you wrong? From here, you're wrong underneath the 200 daily moving average, 7%. Now, the danger with that is one thing that can happen is you can get a wick all the way down here. It could come all the way down here, and then it can end up closing above the 200, and that'd be fine. However, your position would have been completely wiped during that wick. So it is good to prepare. If you've got a high leverage and you're saying this is where you're wrong and you've got a stop loss down there, potentially that's you coming out of your position, market running against you. And if you were still in your position, it would have run. So it is a case of how much risk on do you want to be. The further the risk, the more you need to protect yourself, because you look after the risk and the reward will look after itself. And unfortunately, you need to really hone down on how you can use the limited amount of capital possible. And using that, unfortunately, it is tedious because it means building positions. When you're building positions and you're putting in stop losses at break even, time and time again, you're going to get hit back at break even. It can be disheartening sometimes. You just got to bear with it. You've got to have persistence, because if you took 9 trades and you got stopped out 9 times and then you didn't bother taking that on the 10th time, you know as much as I do, Brad, what's going to happen on that 10th one. Right. It's the same with drawdowns. It's the same with drawdowns. And I was always taught that if you've got a trading strategy and you're going through the emotions of it, it's not going to work out if you've got a 50% win rate that you're going to win 1, you're going to lose 1, you're going to win 1, you're going to lose 1. It's more likely you're going to win 13 and lose 13 than it is win 1, lose 1, win 1, and lose 1. And that's just because of the style of the market and the conditions of the market, that sometimes the market's given and sometimes the market's taken. And when you're going through these long drawdowns, unfortunately, that's where you really need persistence. And one thing that you get taught is if you're going through a bad drawdown and you're worried about losing capital and you're going through a bad drawdown, but you're sticking to your strategy, you can reduce your allocation until you start getting moves to the upside, market's more favorable, allowing your strategies to take effect. Then you can start increasing your position to normal size. So you're going through there, but you're losing less capital. But when it turns against you or when it turns for you, then you're there and you're prepared and you can take advantage of that. It's a weird thing because people look at win rates and people say 50%, 40%, 33% win rate. And I think that that's going to be kind of roughly how often it will win, 1 in 3 times, 2 in 3 times. But it does go through a big spread of you win a load and you lose a load. And you've got to make sure that the winners outweigh the losers over a long period of time. And that's consistent profitability. And it's something as far as strategies are concerned, Brad, I'm not even there yet. I don't have enough time to put all of my strategies into place, because you have to have consistency over a period of time on whatever time frame that you've done it on. And like when I've done one on the 4 hour, I've done one on the 1 hour, and I've got real good profitability on the back of there with a 2-to-1 risk to reward, and I've got a 63% win ratio. Whereas if I just sat and stuck to that, mind you, it's only got 200 back tests, so it's not enough for me. But if I sat and I stuck to that, it's a money printing machine, but it's all hypothetical, and I haven't got the time to sit, unfortunately, in front of a screen for 1 hour, 4 hours. And that's not the kind of thing that I want to do. You're trying to create passive income. And unfortunately, that's not sitting in front of a computer all day. When I look at trades, I like to do it over a longer period of time. And that's why I prefer swing rather than day trading, Brad. Okay,
fair enough. I'm looking forward to this next question, because we got a gentleman in the chat that says he took a short trade on ADA, and he wants to know your thoughts on ADA. And I thought it would be kind of funny, or, you know, not funny, but I would love to show. I actually watched a video yesterday that has me relatively convinced that ADA is poised for a breakout. And so this is, once again, this is BYDFI money. But I put in a $440, what is it here? $479 10x long on ADA just yesterday.
Yeah.
And he is shorting ADA. So I think we would both be interested in hearing what you have to say about ADA, and not necessarily which one of us is right or which one of us is wrong. But, you know, just curious, what is the chart telling you? I was watching a guy named Crypto Jeb, who I have a lot of respect for, that was showing a relatively good case for, you know, a $2 ADA in the not too distant future. He believes that a $10 ADA by the end of this decade, you know, by the 2030, you know, time frame, he thinks that a $10 ADA looks very, very reasonable. And he's looking at a, you know, about a $2 ADA in the shorter term, like anywhere from a couple of weeks to a couple of months. So I'd love to get your thoughts on ADA, and, you know, how crazy of a trade this is. Once again, I can't lose money on this trade because, you know, it's the money that BYDFI gave me. But at the same time, I wouldn't mind winning. You know, I'd like to make some money that I can actually use for life. So far, my BYDFI free money, I keep losing the trades. And then we come over here to weeks where this is my own money, and I can, you know, and I can use this if I want to. Well, I don't have my screen pulled up, but like the last 7 or 8 or 9 trades that I made on weeks, all winners, all heavily in profit. And then my BYDFI account, if we take a look at like if we go here to position history, well, I guess I made $31 on this trade, but you can see, you know, red. Well, I guess I made a little bit of money here and there, but it seemed like most of the big ones, well, I guess maybe I'm not doing as bad on BYDFI as I was thinking I was. But long story short, what do you think about ADA? And if you had to pull the trigger on an ADA trade, would you be longing it or shorting it?
Mate, I've pulled that trigger already. I'm with you. I'm with you on that. So this was my first entry. This is what we were talking about earlier on. It fits nicely. This was my first entry. We got the breakout. It come back down. You see this candle wick here, Brad? Literally on this daily moving average, 74 cents. So I got my entry at 74 cents. And then my entry now, let me just check. My entry is a lot higher than what it was because of exactly what we were saying about scaling a position up when you're in a moving market. So my position now, on my entry price now, is actually 84 cents. So my position's 84. Once we've got a break of this previous high here, I went higher leverage, and then my position's now 84 cents because I went on a higher position over a higher, because so it pushed the higher amount up, because obviously I've added a higher allocation of risk than what the initial one was. So the stop to break even on that now, and that 74 cents, which was a cracking entry, is now no longer 74 cents. Unfortunately, it's further up here. But as far as AID is concerned, mate, literally, I've been 3.5 years nearly on YouTube now, and this is something that we've gone through time and time again, and we've charted this for the whole 3.5 years, and this is the Wall Street cheat sheet added to the ADA chart. And one thing that I've been saying for a long time now, Brad, a long time now, is once we put in this low here, I knew that $1.32, this was all the way back here, December 2022, January 2023, I knew ADA was going to get battered at $1.32. How did I know that? We talked about it time and time again. 38.2% retracement. Look at that, Brad. It's touching it, it's kissed it, it's bounced off it, it's come all the way back down on the back of that. And I knew that 38.2% retracement was going to be the bull market barrier, the first bull market barrier. So we come back down and we were in accumulation phase. This is the whole of 2025 so far on ADA. Absolutely love ADA. So we've had a breakout, positive. We've broken the 200 daily moving average, positive. We're taking out the previous lower high, positive. This here is the biggest area of traded volume within the whole of this range from the previous bull market high to where price action is now. And this volume is getting less, and it's getting less, and it's getting less as we're moving up. You can see declining, declining. Whole thing is declining. Now, what happens when you get a lack of a buildup of price action? This is what happens when you get a lack of a buildup of price action. See this move here, straight up. See this move here, straight down. You've got no support, you've got no resistance in between. People don't know where to put stop losses. People don't know where to put buy orders, depending on whether you're on the bull side or the bear side. So we go to the next support or we go to the next resistance point. That creates an acceleration. That's what we got here. That's what we got here. And this is exactly what we're going to get here. This is exactly what we're going to get here, Brad. You've got $1.32. We've broken. We're going to go back and test $1.32. That's why I said about my ADA trade earlier on. I've took two levels, 132. The other one's $2. And crypto Jeb at $2 is exactly right, because I've been saying it for months and months and months and months. You're going to get this acceleration because there was an acceleration here. There's an acceleration here. Once we break through there, there's no resistance. Guess what? 61.8% retracement of its previous all-time high. Magic number, $2.
I like the sound of that. So, Gabriel, do what you want to do with that. It sounds like being in a short on ADA could be risky business.
I think so, mate. I think so. Unless it's a short-term one where they're trying to get a pullback, depends. The thing is, you got to look where the flow of money is, Brad. And in a bear market, people are looking to long. In a bull market, people are looking to short. And unfortunately, that's not where the flow of money is. We've turned bullish now. You can look at the bubbles, and all of that is on the day. You look at the week, you look at the month, you look at the year. We are bullish. We are bullish. So don't short a bullish market, because like we say in the previous one when we talked last Tuesday, don't look at resistance in a bull market. Don't look at support in a bear market. Them things get battered, and they get battered. And if the market's going down, the market's going down. That's the flow of money. You need to follow the flow of money. Unfortunately, flip that in reverse. When it's going up, short in the market doesn't make sense to me.
Makes sense. I agree. Gabriel says he's new to crypto. So thank you so much for being here and checking us out. Man, that's why we do this. I can't speak for Keith, but I believe that that's a big part of the reason is, we want to help those of you that are newer to crypto, figure out this crazy, wild, wild west, and give yourself an opportunity to hopefully make some life-changing money. So new people to crypto are the lifeblood. We love all of our long-term crypto holders too, but I get excited every time I see somebody that's new to crypto that's coming in and that's getting all of this information. You're making a great decision. Watching these videos, go get subscribed to Crypto Bullseye. He does a ton of 3, 5, 8, 11-minute videos. I know on these live streams we go a long time, but if you're looking to get you know, you got 5 or 10 minutes and you want to get some incredible information and learn about a specific token, Keith is doing some incredible videos. So go watch Keith as much as you can. And I'm telling you, you will shorten your learning curve and hopefully avoid, you know, I lost thousands and thousands and thousands of dollars in crypto before I started making money. I definitely, you go to college, you pay for an education, you get in crypto, and generally you're going to pay for your education. And no matter what you do, you're going to lose a little bit of money probably. But I believe that by being a part of channels like mine and Crypto Bullseyes, you can significantly increase your learning curve and lower the amount of money, your education, your tuition, if you will, before you start winning.
Yeah, because it is about self-development. And when you're looking at self-development, you say what we talked about previously before, Brad, half an hour a day. You could spend 5 hours a day self-developing yourself on the wrong thing. Whereas that half an hour a day, if you develop yourself on the right thing, you're going to get more out of it over a shorter period of time. So focusing on the actual thing where you really need to self-develop and not just kind of leaning on people to look for the information that you want to hear and leaning on those people to spoon feed you that information. Myself and Brad, one of the things that the reasons why we get on so well is we try and teach you this information so you can learn yourself. And that'll shorten that span of 4 or 5 hours of being spoon fed something to half an hour of you actually trying to self-develop yourself. And one good thing to do is get yourself onto not just TradingView or any platform, whatever the platform of choice is. I'm not affiliated with any of them. And just follow along with myself, follow along with Brad. Don't actually put anything in there. Try and see if you can learn and see if you can get an edge. And that's one of the main things. And that's one of the big things with cryptocurrency. And one of the big things with trading is you can look, you can understand, you can test, and you can understand exactly how profitable you are before you've even opened your business doors. So go look at it, guys. Familiarize yourself with the charts. And one thing is, if you familiarize yourself with the charts and you look at the charts half an hour a day, next time that myself and Brad are on the channel next week, you would understand a lot more about what we're saying. You'll understand a lot more about fair value. You'll understand a lot more about the risk curve because you're associating it with something that you're physically seeing rather than something that you're looking at just to take information on during that period. It's like writing something down and writing a list down. You take it in if you write it down more than what you do if you don't write it down. And I think that's something that you mentioned in your video yesterday, Brad, and it's something that I have to do as well. Otherwise, I'll forget. I'll just completely forget. So write it down, understand, learn, develop. And then as you're looking at myself and Brad or any other trader, anybody else, the more questions that you ask us are going to be more directed towards your learning, and you're going to understand a lot more quickly because you've already understood the development that you've gone through by just actually observing something, by just looking at something. And we'll be able to help you out a lot more because we want you to be on this journey with us. And one thing that Brad said about the guy that was new, I physically struggled to remember 5 years ago what I was like in crypto. I can remember making loads of mistakes, but I physically struggle to remember because of the journey that you've been on, the 5 years of building. It's hard to just understand exactly how far that you've come. And when you get questions like this, it brings you back a little bit. And it's quite nice to see that with the new guys. And it helps you focus on how to help them best because these are the things that you don't think of when you've been in for 4 or 5 years. You don't really understand. So it is nice to see things like that, Brad.
Yeah, absolutely. I agree. We've been going almost an hour and a half. I don't want to keep you much longer, but I was just curious, real quick, you know, you can go through this, you know, fast. Are Polkadot and Polygon two tokens that you are still considered to be in, you know, trading zones? Or, you know, like I noticed Polygon is up 49% I'm seeing on CoinGecko over the last 30 days. So if somebody was interested in potentially trading Polygon, should they wait for a retracement, kind of like on ICP, or wait for it to break through a level? And then what are your thoughts? I mean, Polkadot at $4.40 to me is still just an incredible, you know, area to be trading. It still hasn't really had its breakout. It traditionally, when it runs, it usually runs up to about $10, $11 like it's nothing. So I'm just curious, though. Like I say, you don't have to spend a ton of time, but I'm curious what your thoughts are on Polkadot and Polygon.
Yeah, so we'll start with Polkadot first. Polkadot, it's at resistance now. So you've got your short term. If you're trading, you expect a pullback, expect a little bit of a pullback, but the momentum's with the bulls at the moment. And I'm expecting it to break through this 200 daily moving average any day now at $4.57. It might take a few days, it might take a week, but I'm expecting it to break through there. We've got these here on Polkadot: bullish divergence, bullish divergence, bullish divergence. How do we know it's a bullish divergence? Because look at all these higher lows here. So we knew on our channel that once we'd broken out here and we'd retested this area here, that it was time for an entry. And guess what? That entry was to the T down here, and that is now an exit. So I've exited the market as far as the Polkadot trade is concerned, but if I was re-entering there now, I'd be looking to re-enter on key Fibonacci pullback numbers. 38.2% retracement, which is $4.03, 61.8, which is $3.65, or if we break through, come back and retest, a little bit higher than where we are now, but $4.54 is a confirmation rather than $4.40 at resistance. Looks better all day long to me, mate. So it's looking at it. So you're looking at it, you're observing it. This is the self-development side of it, and this is how you can help understand and identify what your next move is going to be. It's got to do one thing. It's got to come back down and hold a support base. If it doesn't, it's got to fall through and hit another support base. How can you plan? How can you prepare for that? If it doesn't do that, it's got to do something else. It's got to break through to the upside of the 200 daily moving average. If it does that, how can you prepare for that? To get a retest. So it's all about looking, observing. We don't understand what's going to happen, Brad. We don't know if it's going to go right up tomorrow, if it's going to go right down tomorrow. We could just look, analyze, and add weight onto our thesis based on what previous data has happened. So we're prepared for a 382. We're prepared for a 618 in this hypothetical scenario, and we're prepared for a break. We're prepared for a close. So the break and close, $5.62, 38.2, $4.04, 61.8, $3.65. Breaking $4 would be quite difficult, I think. Breaking $4 would be quite strong. What was the other one? Polygon. I'll have a look at Polygon.
Okay. So real quick, before you switch gears to Polygon, I want to show you something. So we talked about this a couple of weeks ago. I got this trade in. Man, it's probably been, I don't know, you'd know better than I did, but I got this trade in way back at $3.35. I got $232 in on 10x leverage. It's up 300%. So right now, my profit on this is sitting at $763. Yeah. And this was one of the ones that I was planning on just kind of letting it run, because as we talked about a few weeks ago, my liquidation is all the way down at $3.04. But are you thinking that it might a more profitable option would be to take some of this profit and then wait for a opportunity to re-enter the trade after a pullback?
Yeah. So if I was gonna, it's a difficult one. So I mean, what I would potentially do, we've got upside momentum. You've got upside momentum. There's a higher probability you're going to get a pullback. You can see that we're overbought. We do need to pull back. So you're kind of indicating towards taking a little bit off the table, hoping it's going to come back down to the 382. What happens if you're wrong and you've taken 50% off the table and you're sat in cash when Polkadot just goes to the upside? Then you just wait for a break. You wait for it to pull back. You wait to reallocate. So there's one of two things that you can do. If it was me personally, I'd take 25 or 50% off the table now, expecting it to start pullback, and I'd monitor that with the stochastic and the RSI. So I'd be monitoring that. I'd be waiting for a pullback. If I can get a bigger entry down here, as price starts doing something like this, bull flag or bull pennant, price starts doing something like this, I could get a break here. And once I got a break here, I could increase my position with the profits that I've taken here with a higher leverage amount to maximize the potential. Because what you've done, just there's the top, but we'll use it from where price is now. You've dropped 7, nearly 8%. You've dropped nearly 8%. So you've cashed in 50%, for example. You've dropped nearly 8%. You're waiting for a confirmation because you don't know it's not going to come down here. If it comes down here, you're laughing, Brad, because you're getting an allocation here.
Yes.
But ultimately, you're waiting for a break. Once you've got that break, you could put a higher allocation in or a higher leverage with the same allocation, get greater return, just by the time you get up to the previous point that you've took profits. So that's one thing that I like to do. But the main caveat is when I'm doing that, Brad, is I don't want any risk. Don't want any risk whatsoever. So I've got to be stop loss break even before I can do that. And that's the reason why I do that. That's the reason why I put in a higher low, wait for a pullback, take profits a little bit off the table, just like you mentioned then, and then wait for that breakout, wait for that confirmation. Once I've got the confirmation, I can whack the risk on, knowing that the previous low has got a higher probability of being the higher low.
Yep. You'd be proud of me. I did take everybody's advice last week. A few days ago, I took, this H-bar trade. I took, you can see here on the, I don't know if you guys can see it on your screen, but it says realized profit 1,500. So I did take about 25% off on this one. This trade is still, even after taking 25%, this thing is still $4,800 more profit that's sitting there. Maybe I would consider taking a little bit more off the top on this one. The trouble is, for me, a lot of times life happens. So full transparency, after I took that $1,500 off the top, I ended up using some of it for life, paying some bills. So I don't have that $1,500 sitting in my account ready to re-enter this trade if I do get a retracement. So sometimes I let things run because I'm less likely to spend the money if it's sitting inside the trade than it is if it's just sitting there in USDT and something comes up. But yeah, this trade here, remember, this has to go all the way back to under 12 or under 13 cents in order to be liquidated. So I haven't decided if I'm going to take any more off the top on this one, or if I'm just going to let this run. But I did take all of your guys' advice last week and pull 25% off. The Polkadot trade, with it only being $232 and $792, I wasn't as worried about pulling some out. But I really do like what you're talking about, guaranteeing some profits and then having the ability, if these things do pull back, to be able to go in even harder. So I will consider, doing that.
Is it going to break now, Brad? It's pumping.
And yeah, look at this. Yeah, now we're at while we're talking, but I mean, it's obviously it's kind of come back. I think if we look at DOT over the last 7 days, I think it peaked up. I think it's hit that $4.60 range a time or two. And like you said, it just hasn't broken through it. But like, yeah, if we look here at the last, 24-day or 24-hour range, even, it was up as high as 456. 7-day range, it was up as high as 465. So it definitely keeps getting rejected at around that $4.60 mark-ish.
Yeah.
But
I still like Polkadot.
When it breaks through that 460 resistance, what did you say the next stop is? $5-6?
Yeah, so you've got big resistance at $5. You've got $5.30, and then obviously once you mentioned the 200 moving average at where it is now. I mean, this has got a lot of upside, and one thing that I don't like is the 236 retracement. The 236 retracement, it is a Fibonacci number, but it's something that's not respected that often. And we take out the 236 and you look at the 382. The 382 is all the way up here at $11. That's the conservative 382 from its previous lower high down here on DOT. So I haven't gone from the previous all-time high. I've gone here. You're talking, look at this range here. This range has been going on for ages. Bigger the base, the higher the space. Once that breaks out, that's going to be a monster. It's 1,166 days in that range, and it's hit once, twice at the top here. So yeah, I mean, you look at that, Brad, you say in a bear market, Polkadot has just hit $11 twice. In a bull market, you're saying it's not going to. It's crazy. It's done it twice in a bear market.
Right.
So no, I'm with you on that. What was the question, mate?
If it breaks through this level of the 460 resistance, what's kind of the next point of resistance?
Yeah, so you got $5.34, then you got the big 382 up here, which is just under $11, which has been rejected twice, but it's bear market bear market highs, bear market highs. So you would expect a bull market to be higher than the bear market. And I look at that. That's a big bearish, bullish divergence. That's a big bullish divergence. That's a big bullish divergence. When you look at price there, it looks insignificant to just this move here. When you zoom out to 2021, you can't even see price. So those moves, they look big, and they are big because those moves are 46% to the upside. When you look at it in the grand scheme of things, you can't even see it. Can't even see it. So, yeah, that's, I mean, conservative, Brad, 38.2% retracement. You would expect that continuation over the next few weeks, that you would at least expect something to hit the 38.2 in a bull run that's been hit twice already in a bear market. So yeah, no, I'm as long as the leverage is not too high, because the one thing that can happen if you've got too high leverage is you can literally get spiked out 10%, 20%. You can lose 30% in a day on an altcoin in a bull market, and it'd be fine. You can lose 30% in a day in a bull market, and the candle still turn green with a wick to the downside. So that's the thing that you need to be mindful of. The higher the leverage, the easier it is to get liquidated. If you've got a 3x leverage, then that's only a 33% move to the downside. You've got quite a lot of wiggle room. If you're on a 2x leverage, you've got 50% downside. If you're on a 1x leverage, it's pretty much spot. You can trade to the downside with certain exchanges with a 1x, trade to the upside with a 1x. But the further down that you go, 2x gives you 50%, 3x, 33%, 4x gives you 25%. So you need to understand that if you go 10x, your altcoin comes 10% to the downside, which is just 11% that one candle, you're wiped out. Your position's wiped out. Thing could just go like this: wipe out, turn, go. You're out, completely leveraged, liquidated. Thing will move to the upside in your way. So that's just one thing to be mindful of. I think that thing's going to go up. It looks really bullish. The higher the leverage, the higher your risk curve. You need to think of that.
Absolutely.
And then what was the other one? Polygon.
Yeah, Polygon.
Polygon, because it hasn't got as much data this now, has it? With,
well, you know, because you have there's like the old version and then the new version. So
got Matic, haven't you? Right. Oh, look at that. 200 daily moving average. So that's going to be your first resistance point, 26 cents. Are you in this trade, Brad?
I'm not in this trade. I've traded Polygon a lot over the last few months, but I am currently not in a trade on Polygon.
Got a strong support here at 22 cents if we do get a pullback. We are overbought, but everything's overbought now. Waiting for a pullback, wait for a pullback. That's your next support area. You can see how this was respected, going all the way back here. So that's your next support base. What I say, 21, just under 22 cents. Once you start breaking through, you've got, do you know what, Brad? It's the difficult one, because Polygon's, it's obviously going to do well, but from a TA perspective, just looking at this, you've got a shelf here, you've got a shelf here. That is a ceiling currently because we haven't broken through. We need to knock through. We need to knock through. The more times that you knock through, the higher probability you are of breaking through. Then you've got the next resistance point once you break through there, that's all the way up here, which is 44% move. But what you'll probably find on this, Brad, is in a bull run, it'll just put in new highs, and support and resistance will be irrelevant because of the previous date. You've got nothing to go by. And that's kind of what I would predict. As far as Polygon's concerned, I think it'll do well. Would I trade it? No, because I haven't got any data to go by. I don't know where the sticking points are. And if I don't know where the sticking points are collectively, 10,000, a million people, or however many people that are looking at trading this, if I can't see where the support and resistance is and where the wiggle room is, the chances are 75, 80% or 90% of the people that are watching it don't understand where the support and resistance levels are, which creates an inconsistency, which wouldn't create any support bases or sell walls that have that consistency. So when you look at a liquidity map, a heat map, you see where you've got Bitcoin, you always have like big heat map liquidity zones above where price is at the next structure resistance and the structure support, whereas it would be inconsistent. So you wouldn't have that strong sell wall or the strong buy wall. You'd have inconsistencies, which would mean it's easier to break through and easier to break through, but more difficult to predict.
Okay, fair enough. And then I was gonna get us out of here, and I still want to, you know, let you go. I know it's been a long day, but we do have a gentleman in the chat neural amine that came in, and I'm not seeing that Uranus or just meme coin are actually even leverage tradable. They're not leverage tradable on BYDFI or weeks. So I don't know if Uranus is, worth going over or not. But if you could just take a quick peek at those, it looks like Aura, the AURA, is leverage tradable. And I'm not sure about just meme coin. I haven't looked at it, but if you just, if you don't mind doing a real quick look at those, that would be fantastic. It doesn't even, I'm not even finding just meme coin on CoinGecko. So it must be just something like that's just on Dex Screener.
Yeah,
Or wait,
no.
here we go. No, it's up 792% today. That's kind of crazy. So
Wow.
that looks like definitely a weird one. It's only got a $32 million market cap. So, but yeah, just give us a quick 30-second synopsis on those tokens, and then we will go enjoy the rest of our Tuesdays.
Yeah, sure. So this is the first one, Uranus. Let me know in the comments, guys. Let us know in the comments what this actually is, because a lot of the time,
meme coin, it looks like.
Oh, right. Okay. Great stuff. So you've got, I don't know, Brad, do you want to stick your finger in the air and have a guess?
Okay. I mean, it looks like, it doesn't look like it's been around for very long. Its all-time high was on July 21st.
Yeah.
Its all-time low was on July 19th. So it sounds like it's a fairly new token.
Yeah. I mean, you've got your rejection point here, which is 15 cents. You've got your support base here, which is just over 7.5 cents. One thing that you can see that's happened here time and time again is somebody's done all right. Let's have a look, find this. Right, price. Someone's done all right. So you've got a pullback here, hit a base here. Then you've got this candle here. I just measure that. This is a 100% move from the bottom of this bit here. 100% move to the resistance point. It's come all the way back down. Done it again here. Support, resistance. Come down here. Support, resistance. Somebody's had a good time here. 100% each time that happens. So if I was to say, where would be a good buy for me? 0.7572. 100% move, where would be a good sell for me? 15 cents. What happens if it breaks through? I'd be happy with 100%. Would you, Brad? Something like that?
Yeah, absolutely.
And that's just speculation if you can get it back for that. But I mean, it's come down and it's done 1, 2, 3, 4, 5, 6 confirmations so far. Can it have a 7th? Who knows? Aura. This one's got a bit more.
Yep.
Oh, look at that. Look at that. Have we got a trend line? We have. Have we got a trend? Let's get this on properly. More touches, the better, really. So you can see it's pretty much you've had, when you zoom out, that's pretty much your trend here, Brad. That's your rejection point. You got your 1, you got your 2, you got 1, 2, 3 fake out, which we talk about all the time. Look at that break. That looks insignificant when we zoomed out a minute ago, but that candle from its extreme low to high, 223%, that really set precedent. Look at the day after, Brad. Well, a few days after.
Right.
Dropped all the way back to the bottom. So this support base here. So from where price is now, it's ranging, but it's got lots of wicks. It's 330% between these few candles here. But one thing that you've got now is you've got your 200 daily moving average. You've got your 50, which is crossing. 50, which is going to cross like that. That's going to cross over like that. That's going to be your golden cross. That's going to be your retail indicator. When you look at these channels here, this is exhaustion, 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 exhaustion. Once you break out, that is nothing, nothing. This is exhaustion, exhaustion. Come up, bulls have had a turn, bears have got control. When you see this here, when you see that, that is the big move. That is the bears grinding and grinding and grinding. This is the relief. That is the bears grinding, but you can see they're not making much momentum. There's the low, there's the low. Grinding, grinding, grinding. How far have they got? Same point. One last try, met by bullish price action, bam, bam, and that should hold. So as far as where an entry is concerned, let's have a look. Oh, it's so messy. You can tell there's not much liquidity in this. What's that on Mexi? Where am I putting the highs? I use that wick. Oh, I don't know, Brad. 618 sat at 0.008959. It's just a big mess, isn't it?
Yeah.
Whoever got that, though, at the bottom, fair play to them. You could see it's been exhaustion. The bears have really tried hard to push that down. And when you see support bases being made on this, I'll start seeing bigger swings on there. I don't know what it is or what liquidity is. It looks like it's got low liquidity, but I mean, things like this, it'd be interesting. Let's have a quick look, actually. Aura Network. Things like this that have got low liquidity. And I say that I've got $1,000. And I say I've got $1,000. But I want to be invested into something that's high risk, like Aura. I'm assuming it's high risk. I'm just guessing.
Right.
We could look at that.
That's
and we can say, right, how much? Is that the right one, Brad?
Yep.
We can look at this and we can say, right, it's 311 as far as the rankings are concerned. It's got a 224 million market cap. I've got $1,000. I've got $1,000 and I want to allocate some into that. I can allocate $5 into that. I can allocate $10 into that. I can allocate $20 into that. Don't have to allocate a high portion of my portfolio. And what you'll find, you know as much as me, Brad, is what you'll find is when you've got 1% of something that's nothing, that 1% of that thing that's high risk that you forgot about and discounted certainly becomes 20% of your portfolio overnight, just like that. And you don't need to put these high amounts into these small, high risk things. And in fact, it's best off not to, because there's a high probability that it's going to go to nothing. But when you've got these little things, these little gems, and you've got $10, $20, $30, $40 entries with these real small caps, making sure that you've got your Bitcoins, your Ethereums, your Solanas, your Cardanos propping up this high risk with higher allocations, that thing goes to nothing. That's fine. Your Solanas, your Cardanos, your Bitcoins have made up for it. So it is good, as far as I'm concerned, to have that kind of allocation of risk, but just make it manageable. 1%, 0.5% if it needs to be. If you're really risk averse and you really want to get into something that's high risk, then you want to be putting less in there. And that's something that people don't realize. And it's something, I mean, Brad, last cycle, I had a crypto.com account and they had something on the card. And basically you went shopping, and every time you went shopping, you got 1% cash back. And I ended up getting $7 out of that, Brad. And that $7 turned into $4,000.
Wow.
On CRO. I got it like literally, and it was nothing. It didn't cost me anything. It was just, I only got it because the card was metal and it looked nice. That was the only reason I got it. And that turned to the most profitable trade that I had in 2021. And I ended up converting that into Ethereum when I told you what I did at the end of the cycle. So it's literally, crypto can be such a given thing. And you look at these things and I'll say, too risky. But if you think about it from $1,000 perspective and you want to go and put $5 into something, what happens if you drop $5 on the floor? You just move on. You forget about it, kind of thing. That $5 that you've just dropped on the floor, if that was allocated into something that's really far down the risk curve that you've forgotten about, that $5 can turn into a money tree. It might not. It's all in accordance with risk. It might not, but that's the power of crypto. I haven't got a clue what this thing is. Would I invest in it? If I really wanted to, and I'd looked into it and I'd seen that it's got a strong community and it's potentially got something utility behind it. If I had $1,000, I'd chip $20 in there.
Okay.
If it's something that I'd viewed myself. I mean, you're probably of the same understanding as well, Brad. It is all about.
Absolutely.
Yeah. So I've probably been keeping you guys for too long here, I think.
No, you're great, man. I appreciate you. I know we had a couple other people come in, but we gotta end this thing. I've got another appointment here at 11 o'clock, so I've got a few minutes to go use the restroom and grab a drink of water and get ready to hop on another call. But man, what another incredible live stream! I learned so much. As soon as I get a free minute, I'm going to take that 500 that BYDFI gave me for this week's allocation and probably go get some ICP. And maybe I don't know exactly what I'm going to get. I want to get it in play. So I want to get something. Was it ICP was the one that we were in the hold zone on, right? We wanted to wait for it to either get up above, I think it was 621, or retrace back down. So maybe ICP isn't what I will throw that into. I'll try to find something that looks like it's a better.
We did see one, didn't we? We seen Atom, didn't we?
What's that?
We've seen Atom, didn't we, which was above the 200.
Oh yeah, Atom. Yeah, Atom. I don't have any trades in on Atom right now, so maybe that would be a good one for me to go throw some a little leverage at with this 500.
What do you think, guys? What's that support? Is there anything that we've missed? Let us know. Drop in the comments after this video, actually, if you want Brad to have a look at anything, or if you want me to have a look at anything. And pack them comments up, and then we can look at that next week going forward, because it'll be interesting to see if you guys have spotted anything. There's millions out there, and there's millions that me and Brad haven't seen. Is there anything that you guys have got?
Yeah, absolutely. That's, you guys, that's why we do, tomorrow is my microcap gem live stream, and tons of the community bring in suggestions and tokens for me to look at. And so, you guys are definitely a huge part of the reason that this all works. Keith and I can only research so many tokens. And so having all of your eyeballs looking at tokens and bringing them to the forefront of our mind, like, you made a little bit of money on SPX, right? Last week, I talked, told you about SPX, and it sounded like you made a little bit of money on that.
I did. That's come back down as a support now as well.
Yeah, I'm out of
mate, and that's something that I've never even seen before.
Maybe I should get back in on an SPX trade.
That looks good for me, the SPX one. Last time I seen it, anyway, I haven't checked it today, but yeah, last time I seen it, it was come back down to a support buy where we were at resistance before, so higher probability move. But completely right, me and Brad can only look at so many charts, so we are guided by you, because there's obviously a lot more of you. So chuck them in there, keep chucking them in there, so we can take a look and see what we think's best.
Awesome. All right, guys. Well, thank you very much for being with us here today. We appreciate each and every one of you, and we will see you same time, same place next Tuesday. Take care, everybody. God bless.
Take care. Bye. Bye, guys.